All right, ladies and gentlemen, welcome back once again. This is lesson 6 of our basic beginner forex trading course. Okay, and in this lesson, I'm going to be talking about the different types of orders. Okay, so we shall talk about market orders, we shall talk about limit orders, we shall also talk about stop orders, and we shall also talk about stop loss orders. Okay, so let's start. Okay, so let's start with the market order. So what the market order is, it will help you enter the market at the current price. So you will use a market order when you want to enter market at current price. Okay, so let's say you pull out your laptop or your computer or your phone, okay, and you're watching the charts, okay, and you think the point that price is a good point for you to execute either a buy or a sell. Okay, so that's when you will use the market order. So you are manually executing the trade by pressing the buy or sell button. All right, so let's give an example. Let's say if price, this is for the buy. Okay, let's say price was at this point right here. Okay, and you think this is the perfect point for you to buy this price. Okay, so if you execute, if you press your buy button on your trading platform, okay, that will be considered to be a buy market order. All right, then for a sell example, if price was at this point and you feel like, okay, this is the right, this is a very good point for me to sell the price. Okay, and you press your sell button on your trading platform or your executing platform. Okay, the one that you use to execute trade zone. Okay, if you press that sell button, okay, that will be considered to be a sell market order. Okay, so one thing I want you to note is you are actually placing the trades manually. Okay, so you're actually doing it by yourself. Okay, all right, so let's talk about the pros. Okay, so some of the pros for this is, you know for sure you'll be in the trade. Okay, because you're executing the trades on your own. Okay, you're the one pressing the buttons. Okay, then the cons, you might pay a premium price. What that means is, in economics we know simple basics. Okay, you always want to buy low and sell high. Okay, so let's say you bought at this point. Okay, let's say you executed a buy trade at this point and price pulls back, okay, to this point, okay, and then continues in your desired direction. Okay, for the person who bought the price all the way down here, because he waited for price to at least drop. Okay, he waited for price to at least drop before he bought it. Okay, so for the person who bought it from down here, okay, would have bought the price at a better price. Okay, that makes sense. I hope so. Okay, same thing. Okay, what I mean by you will pay a premium price, let's use this sell example, okay, just to elaborate more. So if you sell it at this point right here, okay, and price pulls back a little bit, okay, before it continues to your desired direction, okay, the person who sold it from up here, who waited for price to at least rise, because like I said, we want to sell high and buy low. So the person who waited for price to at least rise first before they sold it would have sold it at a better price. That's what this means. All right, all right, so let's move on. So let's talk about limit orders. Okay, so unlike the market orders where you enter manually, so the next orders I'm going to show you, you will enter the market automatically. Okay, like I'll show you. Okay, and for this limit order, okay, there are two types. Okay, there are buy limits and sell limits. Okay, okay, so let's talk about what's a limit order. Okay, so as you see, it says enter only if market comes back to your desired price. Okay. All right, so let me use an example to illustrate that. So for a buy limit, okay, let's say price was at this point right here, okay, but according to your strategy, you think that price will pull back first, okay. All right, according to your strategy, you think price will pull back first before continuing in your desired direction, okay. So what you will do is you will place a buy limit order just below here, right? So that when price comes back to that point where you place the buy limit order, it will be executed automatically. So you don't have to be sitting on your laptop, your computer, or your phone. No, you just place the buy limit order, and then when price reaches that point, it will be executed automatically. All right. So let's look at a sell limit. All right, so sell limit is the same thing, but this time it will be selling. Okay, let's say price was at this point, and according to your strategy, you think that price will pull back up to price will pull back first before continuing. Okay, so what you will do is you will place your sell limit just above here. Okay, so that when price is rising up, if it reaches that point, all right, it will continue in your desired direction. Okay, and this will also be done automatically. Okay, you don't have to be sitting on your laptop or your phone looking at your phone or looking at the charts. Okay, you just set it and wait for price to get to that point. Okay, so like I said, so the principle I talked about, you always want to sell high, okay, and buy low. Okay, so this right here fulfills that principle. Okay, because like I said, if you sold it, for this sell limit example, if you sold it from down here, okay, the person who sold it from up here would have sold it at a good price because he waited for price to at least rise before he sold it. The person who bought price from down here waited for price to at least drop first before he bought it. All right. So let's talk about the pros. So the pros, like I said, you enter at a cheaper price. I've just explained that. Okay. Then the cons, you might miss the move trading against the current momentum. Okay, and what that means is, let's say for this buy limit example, okay, let's say you think price will pull back first, okay, before continuing all the way up. Okay, you could be wrong, okay, because this pullback right here could actually be a sell momentum. Okay, so you could be trading against the sell momentum. Price could have changed direction. Okay, so you will be trading against the sell momentum. Same thing for the sell. Okay, you might think that this is just a pullback, okay, for you to be able to sell it again, but it could be a buy momentum. Okay, price could have changed direction. All right, that's what this means. All right, so let's talk about stop orders. Okay, so stop orders, again, these will be executed automatically, and we have both buy stop orders and sell stop orders. Okay, all right, so what are stop orders? Okay, so enter the market if market moves in your favor. All right, so let me use an example for that. All right, so for a buy stop, okay, so let's say price was at this point right here, okay, and according to your strategy, you think that, okay, price will continue all the way up, price will continue buying. Okay, so what you will do, you will place your buy stop just at this point, so that when price hits that point, it will automatically execute that trade, okay, for you to continue in that buy direction. All right, the same thing for the sell stop. Okay, if the price was at this point right here, okay, and you think according to your strategy that if price reaches this point right here, okay, it will continue selling. Okay, so what you do is place your sell stop order just below, just here. All right, so that when price gets to that point, automatically executes you in, and then continue all the way down for the sell. All right, so what are some of the pros? Okay, some of the pros is you enter trades with momentum. Okay, like I said, for this buy example, okay, for the buy stop example, so price is moving up. Okay, so the momentum is for the buy. All right, the momentum is for the buy. So for you to place a the buy stop order up here, you are trading with the buy momentum. Okay, same thing. Okay, using the sell stop order. Okay, you executed the trades with the sell momentum because price is going down. Okay, so when price hits that sell stop order, it will continue that sell momentum. All right, then some of the cons is it might be a false breakout. Okay, what that means is, let's say price might be buying. Okay, it reaches your sell stop. Okay, trigger or the buy stop for this case. Okay, because it's a buy example. Okay, it reaches your buy stop. Okay, trigger your buy stop in, then change direction. That's what this means. Okay, it might be a false breakout because it will trigger your buy stop order in, all right, then fake you out, then reverse. Okay, so in this case price would have reversed. All right, same thing. All right, so you might think price will continue selling. Okay, it reaches your sell stop order. All right, trigger you in. All right, then reverse. Okay, that's what a false breakout is. Okay, so you will lose this trade. Okay, all right, so let's talk about now the stop loss orders. Okay, so unlike the orders I've talked about in the previous slides, okay, for a stop loss order, um, it will exit you out of the trade, unlike the ones I've talked about before. Okay, those ones will help you enter. Okay, the market, the limit and stop orders will help you enter the market, while the stop loss orders will help you exit the market. And this is useful when the market goes against you. Okay, all right, so another thing I want to bring to your attention is what we call take profit. Okay, so take profit and stop loss are similar. Okay, they are similar. The only difference is for the stop loss, price would have gone against you. Okay, so it will guard you when price goes against you. Then for the take profit, okay, when price goes to your direction, when it reaches that point, okay, it will exit you out. Okay, so they both exit you out. The only difference is with the stop loss, price would have gone against you, and then for the take profit, price would have gone in your direction. All right, so let's use some examples right here. So let's say for this buy stop loss example, okay, you think that, okay, price pull back to this point, okay, and this is a great point for you to enter the market so that you continue the buy. All right, so if you enter the market right here, okay, you will place your stop loss order just below here. All right, so that if you're wrong, okay, if your analysis is wrong, okay, and price doesn't continue all the way up but instead comes down, okay, when it hits that point, okay, you will be exited out of the market, obviously with a loss. Okay, and I advise everyone to use a stop loss, because if you didn't have this stop loss, okay, if price came all the way here, okay, and you didn't have a stop loss, price continued all the way down here, all right, if you had a stop loss, you will lose only this. But if you didn't have a stop loss, you will lose this much. Okay, so you see the importance of the stop loss. So a stop loss is used to guard your account. Okay, it's used to protect your account. All right, so let's talk about the sell stop loss now. Okay, the example. So let's say according to your analysis, okay, you think price is pulling back, and when it reaches this point, it will continue down. Okay, but you are wrong. Okay, so what will you do when you enter price at this point? You put your stop loss just above here. All right, so that when you're wrong and price comes to this point right here, okay, price didn't continue in our direction, we were wrong, price gets to your sell stop loss, okay, you will exit that trade with this loss. Okay, with this loss. Okay, so let's talk about the pros. Okay, So it helps you cut your losses. Okay, like I said, okay, instead of losing all this big right here, all this much, okay, you will lose just this. All right. Then some of the cons are the market might reverse in your direction, and what that means, let me use this sell stop example. Okay, so let's say you enter the market right here, okay, and you think, okay, the market will continue going down, so you hope the market will sell. All right, price might come all the way, okay, trigger your stop loss, okay, so get you out of the trade, so you will make a loss, then continue in your desired direction. All right, the same thing with the buy. Okay, you might think, okay, according to my strategy, okay, when price reaches this point, it might continue up, and you're right. Okay, price reaches that point, all right, it continues all the way to your stop loss, okay, triggers your stop loss, gets you out of that trade, and then continue up. Okay, so it will take you out of the trade, then continue in your desired direction. All right, so let's do a recap from. So in this video, we talked about orders, and we talked about market orders. We said they help you enter markets at that current price. Okay, if you use this, if you want to enter market like now, all right, like when you look at your charts and you want to enter the markets, you use the market order. All right, so we also talked about the limit order. Okay, and we said enter only this, you use this when you want to enter the market only if it pulls back or reverses. Okay, we talked about the stop orders, and we said you use this if you want to enter the market if it moves in your favor. All right, preferably use for breakout. Okay, for breakouts. Okay, let's say you anticipate the market will break out. Okay, this will be the best option for you to use. And we also talked about the stop loss order. All right, and we said this will help you exit the trade if it goes against you. And we talked about the take profit order as well. We said it's similar. The only difference with the stop loss order, it will help you exit the trade if it goes in your direction. All right, so I've come to the end of this video, and I'll see you in another one. Bye.